Nvidia reporting after the bell today, joining us with what to expect from the major player, the player in AI. Geoff Lewis, founder of Bedrock Capital. Bedrock counts OpenAI, Plaid, and Bitcoin in its portfolio, among many others. Good morning to you. We've been looking at this company as sort of the bellwether of the world of AI. We talked about the hype cycle and everything else about AI. Where are we in that, and how should we think about Nvidia at this point?
Well, you can't think about Nvidia without thinking about Taiwan, Andrew. I mean, their largest supplier, of course, is Taiwan Semiconductor, and sort of really pivotal supply chain dependency there. And I think there are a lot of questions that we have to ask around what exactly is going on there. I mean, the wait time on the chips at this point, I think, is something like 40 weeks. You have companies complaining of these very long wait times to get these things. And there is, of course, major geopolitical risk around Taiwan. You just had China conduct war games around Taiwan over the past few days ahead of the presidential election there. And there are a lot of questions around these GPU chip shortages, which I think are sort of being very under-discussed in the markets. And so big questions there, quite honestly. It's obviously been an incredible story, an incredible run-up. I stated on this program in February that I was very bullish Nvidia. I still think they obviously are the key player here, but we do have to ask a set of questions when you have the NASDAQ effectively being carried by a company that is dependent on Taiwan for their core component. And so
is there any other company right now that you see sort of on the make in this space where you think realistically in, I don't know what you think it is, 12 months, 24 months, 36 months, longer, that you think is actually going to give this company a run for its money?
You know, it's early days. There are some companies in the private markets that have new approaches to creating these GPUs. One is Lambda Labs that I'm not invested in here at Bedrock, but we're pretty excited about it. We think they're interesting. There are different approaches. I think you're going to see, of course, more domestic production of these chips, but all of that is going to take 2 to 3 years to really ramp up and get to scale. And I think in the interim, we are going to have just a major shortage of these GPUs, which is gonna cause to a deflation of this AI bubble that we've been in.
Let me ask you something separate about this AI. You just referred to it as a bubble, the AI bubble. Do you think that this whole thing is a bubble, that it's all overstated? I was talking to a CEO last week who said, you know what? We've been playing with OpenAI, we've been playing with the new Microsoft products and all of the, a bunch of things out there. Day-to-day use case, still limited.
Yeah, I mean, I definitely think it's a bubble, and two things can be true. There can be a tremendous tailwind ahead of us with AI, which I do strongly believe, and then at the same time, the value capture can be quite limited. And so if you look historically, we've been through now 1.5 enterprise planning cycles since ChatGPT launched back at the end of 2022. There have been probably, Andrew, 1 million or so AI products that have launched in this time period over these past few quarters. And still today, in August of 2023, the only AI products that are really production grade, generating meaningful revenue, tremendous usage, are OpenAI's ChatGPT 3 and GitHub's Copilot. And both of Microsoft has, of course, their relationship in both of those. And so I think we are still at a stage where the hype is way ahead of the sort of revenue capture, revenue generation. And I do continue to believe that the majority of the value here is going to be captured by the big tech incumbents. You have the top 10 enterprise SaaS companies with $100 billion in free cash flow. You have consumer products companies with the top 10 with something like 50 billion in free cash flow. We're going to see a lot of M&A activity. We're going to see lots of mandates with big tech to integrate AI. But for the everyday investor coming in, I do think we are very firmly in bubble territory here.
So in terms, though, of investing, you think that the bigger opportunities are not going to be the small private companies, but the big SaaS companies, the big enterprises? And if that's the case, are they undervalued today?
Arguably they might be. I do think that this is the type of enabling technology that makes the big guys get bigger, and that raises a whole host of regulatory questions down the line. but you are seeing the companies which are moving quickly to leverage AI get a lot of productivity gains. Given the capital-intensive nature of this sort of space, given the need for these chips, given how expensive these GPUs are, the big guys with cash on the balance sheet, I think, are going to capture a lot of the value. There is no question that AI is going to radically transform how we work, how we live over 10, 20 years to come for me. But I think the sector is definitely overheated today.
Geoff, real quick, though, is this an issue, though, of capturing more value or defending value? Which is to say, are these big companies going to be demonstrably adding serious revenue and profits as a function of this, or are they effectively going to be defending the turf that they already own?
Well, it might be some combination of both. I think the specific thing that's going to happen is lots of jobs are going to go away. Lots of jobs at these big companies are going to go away. AI more generally is going to destroy lots of jobs over the next few years, and it's new job categories will be created, but entire categories of jobs are just going to go away, and presumably that does make these companies somewhat more profitable over time when you have less people working there.